Hello and welcome to another update video about Ethereum. So after Ethereum yesterday reacted here to the golden ratio on our resistance area and then failed to make another higher high afterwards, it dropped out of our ascending wedge, which is considered a bearish pattern. Normally you would say the first target of a wedge is the beginning of the wedge. That's also where we kind of stopped. Yes, briefly we dropped below it, but that's exactly where we stopped. As you can see here, we're currently holding that low, but that's normally only the first target of such a wedge. I would fully expect at the moment for it to head further to the downside, and I will keep that view as long as it's holding 1601 or lower. Yeah. So ideally it's holding below 1601. The reason is this is a previous support and it's also the 50% retracement, and my view is that we are currently coming down in in a C wave, yeah, which is a 5-wave move, and within this C wave we are currently just retracing in a 4th wave. So first of all, bigger picture, I won't go through the scenarios anymore. I did that in yesterday's live stream and in the previous video, I think, very clearly, so feel free to watch the previous one. But just the imminent one here that I'm looking at it, and my view is that we are coming down here in an A wave. We came down in an A wave. This was just a B wave rally, a potential we focused on the entire week, that this is just a B wave. The risk was there, and this was also the point after it reacted to this resistance, that the B wave was technically complete. It didn't need any more waves to the upside, okay? So that was when we needed to be focused very much on, are we holding the trend line, are we holding the support area or not? And yeah, it followed then to the downside, gave you a support area here that it needed to hold. It fell below it, and when it dropped below it, then it accelerated and came down to 1540. Yeah, so we are basically, yeah, we retested the lows of the last weekend, which was here that 26th of February at around 1550. As I highlighted, if we lose the micro support, we're probably going to come down to retest the lows of the previous weekend. So I think that was absolutely correct. And at the moment, I don't think this move down is finished. And as I said as well, if we retest those lows, there's a high risk we are going to break down, invalidate the immediate upside, and will retest the lows of the 13th of Feb. And that's, I think, what we're going to do. For me, on the micro level, there is one more low to come, at least 1 or 2 more lows. Yeah, so it could very well be that we are working here on a so-called 1, 2, 3, yeah, and then 4, 5 pattern and impulse. This could be a 4th wave. I'm pretty sure this is a 4th wave. Now, I should never say I'm sure, because you can never be sure in these markets. But from all I can see, that's my read of the market at the moment, that this is a 4th wave. It has pulled back into the resistance area that you would normally expect for a 4th wave. Loyal viewers will know that's typically the 50% retracement all the way down to the 23.6. So let me just adjust that a little bit, make it a bit smaller. Here in this case, between 1601 and 1571. By hitting 1571, it has basically done the minimum it needs to do. The ideal level for a wave 4 is normally the 38.2 Fib level. That's the most frequent level a wave 4 would touch. That's here at 1587, so I wouldn't be surprised to go to that level, or maybe even max it out to 1601. It's just that a sustained break above 1601 will make immediate downside less likely, and could indicate that a low has already been made, even though I'm not primarily focused on that. What I'm unsure about is if this 5th wave to the downside will finish this C wave, or if we need one more, so that this is just currently a 4th wave in a 3rd. We will then get a 4th, the main 4th, and come down in a 5th. So what I'm unsure about, could be there's a small 1-2 hidden in here, or here, yeah. This is what we need to be watching, what I'm a little bit unsure about, but this is sort of the micro level. Either way, I would expect this to head to around 1480. Yeah, why is that the case? Explained that in the previous videos as well. The reason is, it is the 38.2 Fibonacci retracement of the larger cycle that started in November. It's the first key level here at 1488. Then we've got the 38.2 Fib level, just measuring it differently. It's at 1479, 1480. Then we've got the previous wave 4 low of the 13th of Feb in that region. Key level, absolute key level, yeah. So there's a lot of confluence there. And then lastly, let's actually see, I can't remember that one, but I think it was sort of in that region. or maybe I'm mixing it up with Bitcoin, but if I measure the length of the A wave, go to the high of the B wave, yeah, okay, then the 1-to-1 ratio takes us also sort of into that region around 1494, very, very close. So I wouldn't be focused on the exact dollar amount here. I mean, if it's 1494 or 1480, doesn't really matter. It should be somewhere in the region highlighted here, in this region, between the 50% FIB level 1410 and 1490. We will be able to specify that a little further if we have visibility, if we need 1 or 2 more lows. It's at the moment not very, very clear, but 1 more low should take us sort of into that region down there. We'll see. 1490, that's when I would start to watch for a reversal. It can always extend out further, absolutely. If it's an impulse down, which it is, it can always extend out further. So don't be surprised if it maxes out that possibility. But yeah, short-term trend clearly down. I just hope we don't see this wave 4 to play out for another 2 or 3 days over the weekend. That will be another boring weekend, but at least we are sort of making some progress in the chart, okay? And after we've come into this region here, yeah, my current read would be that this is an A wave, so ABC in wave A. We are then going to head up in a B wave and will come down in a C wave into further and deeper into this area. That would be my preference for a wave 2 scenario. The other possibility is, of course, and that's what I did say for Bitcoin as well, is that this 4th wave actually never ended. That's a bit of a whale, a whale scenario, because it will mess up most people's accounts. Yeah, to assume wave 4 was never. I haven't seen it anywhere else actually talking anybody about this scenario, but it's absolutely valid to say that the move down here was only an A wave. Because remember, we really did only the minimum here. We then moved up in a B wave, and this is now going to be a C wave down. Yeah, or WXY. And then we finished the 4th wave somewhere here. Should be in the yellow region though. That's why I'm not keeping these scenarios too separate, because they are very, much aligned with the support area here. And then we should also see a reaction here. Difference would be the rally wouldn't be a B wave, it would be the wave 5. So this wave 5 is actually going to sit up there. So yeah, that's sort of where we are. In both cases, very short term, I would expect further downside very clearly. Yeah. And then we should see a reaction to it, and then we'll see which one of these scenarios it is. But here, as long as we're holding 1601, downside further, yeah. Looks like a bear flag, basically. And if you zoom in, it looks even a bit like a so-called ascending wedge pattern. Yeah, where if you draw the trend lines, but this is the absolute micro level here. So where we could expect it to drop to the downside. Okay, that's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership, and also make sure you follow us on Instagram and Twitter. There's additional content every day. Plus, if you're interested, check out our TA and trading course on morecryptoonline.com. Thanks a lot for watching. Bye-bye.